Hello viewers, welcome to my channel. Let's talk about a few captivating topics in our today's discussion. We'll kick off with self-introspect, followed by my core stock investing principles and rules, which I follow day to day. These rules have been personally tested in my everyday investment practice and learned from some of the seasonal experts in the stock market. So please listen carefully as I share some of the knowledge sources in this video. Let's jump into the first topic, and it's all about self-introspect. If you're new to stock trading or to any type of investment, there are a few rules to follow to be successful in your investment. We're going to primarily focus on stock trading in this session, and I'll cover other investment types in my later videos. Before investing, it's important to identify what type of trader you are, which best suits your lifestyle and investment goals. There are several different types of trading styles available, like day traders, swing traders, and long-term traders, each with its own unique strategies. Let's start off with day traders. Day traders are active investors who use high risk, high reward approach to trading stocks. They aim to make quick profits by buying and selling stocks within a single trading day. Day traders monitor the price and volume movement of the stock on a very granular scale. The normal chart period is between 5 to 15 minutes charts. In addition to that, they have some key indicators to support their strategy. They rotate money faster and cut losses early to stay active in the market. However, day trading is very fast-paced and high-stakes activity that can be emotionally taxing for traders and requires a lot of discipline and knowledge. It is important to have a solid understanding of the market and trading strategies before engaging in day trading. Next comes the swing traders. Swing traders is a type of trading that involves holding a position for more than one trading session, usually not longer than several weeks or a couple of months. Swing traders aims to profit from short to medium term gains in a stock or any financial instrument over a period of a few days to several weeks. They primarily use technical analysis to look for trading opportunities and may utilize fundamental analysis in addition to analyzing price trends and patterns. The next comes the long-term investor. Investors who prefer to take on low or medium risk and seeks out fundamentally sound companies are often referred to as long-term trading traders. These traders look for companies with a strong balance sheet, reputable, recognized senior management, and a history of innovation. Long-term traders typically hold on to stocks for years or even decades and cannot monitor the market daily. Instead, they dedicate a few hours each week to research and invest in the companies that they believe have a strong growth potential. They are willing to tolerate the daily fluctuations of the market in order to achieve long-term growth. If you're interested in learning more about long-term trading or fundamental analysis, wait for my future videos. The next topic is about affordability price range. Knowing your affordable price range, which you are comfortable to invest, is key for any investment to be successful. If you're a beginner, make sure you understand your strengths. Know your price range. It's key for your investment. Identifying the price range can also help you to target the right set of stocks in the stock market. The higher the price tend to grow slower, as many of the investors have already invested money, which has increased the demand and the price has bumped up. They are highly stable, less risky, but less profitable in short-term strategies. However, could return higher returns in a long-term model. Next, let's jump into the stock investing principles and rules. Here are a few rules which I use regularly in my stock trading. These rules are universal and can be used in any stock market worldwide, as they are common across markets. However, my insights are primarily from US stock market, where I trade stocks regularly. On a high level, we will learn about why it is key to find the stock price which fits your budget, followed by buy and sell signals, which are used regularly in the stock selection, a well-known strategy to buy shares gradually, learn to cut losses early to stay active in the stock market, and a few basic patterns which I use in my stock selection. To start off with, the topmost rule is to know the stock price range which fits your budget. You can buy an expensive stock, however, they tend to move slower. They are good for long-term investment. However, for a beginner, I was eager to see whether I was able to make some money in the stock market. And some of these expensive stocks was not helping me to build the confidence in my trading style. It is always important to do frequent trades to learn and refine the system and also generate profit or loss on every trade you do. You will learn faster if if you trade stocks regularly instead of buying an expensive stock and stuck with it. Let's take an example. Assume that I want to invest $2,000 in the stock market buying stocks. I can buy a $500 stock for this amount, which ends up four stocks for this amount. Based on the historical trends, some of these expensive stocks tends to go slower, typically anywhere from 1 to 2% per month, which is very common with high cap companies as their price has hit the saturation period. If you buy this stock, you need to stay patient to get the 1 to 2% growth in 3 to 4 weeks. And within this period, there's a good chance that you will miss out other good stock opportunities which could provide you a higher return. In the stock market, it's all about finding the right opportunity where your investment multiplies. Personally, I tried some of these stocks and had to sell out with losses as I couldn't do frequent trading to learn a working system. So let's explore some of the buy and sell signals that I learned from the expert and used to purchase stocks in the stock market.
Please check out
Let's take
my
a look at
next video
what they are.
about deep dive on the investing rules in the description below.